All right, so thank you for joining me. I am Erica Sell, Aging with Harmony, and today I have on Karen Van Dyke and David McGee. Karen is we would say, a housing consultant. She is really the best that there is in helping seniors find the right placement, the right living scenario for them when that time comes, if home is no longer the best option. Karen works in San Diego and knows all the facilities in and out. And I have had personal experience with her being able to coach my clients through that experience. And David has a company, C2 Financial. They are a mortgage broker, and he specializes in reverse mortgages. One of the nicest, most honest guys I know, and would trust him with my senior relative to help them find funds in their home to continue their aging process. So thank you for joining, guys. Thank you so much for being with me today.
Pleasure.
Welcome.
I wanted to get us together to talk about the cost of aging. It's our theme this month at Harmony, and it's a really big theme in our national dialogue lately because we have so many people who are aging, and the cost of these things keep going up and up. A lot of people say, 92% of people say they want to age in place, age in their home. But the fact of the matter is, a lot of people end up not being able to do so. But either way, of the people who are living to 65 and beyond, 70% of them end up needing some sort of long-term care. And then those annual costs for care range from anywhere from 80,000 a year all the way up over 150,000 a year, depending on your city and the number of hours of care you need in the care setting. So those are not small numbers.
No.
Those are big numbers. Um, and so, David, we'd love to have you pop in first about what do you see with your clients and what are some solutions they're finding to be able to age the way they want to and where they want to.
Well, I have experience both on the forward side and the reverse side in the lending space. I do come into our group and deal with a lot of seniors as a reverse mortgage specialist. However, I've had over 30 years experience in lending, and I do forward loans too. Currently, the rates on forward loans are super low. We have a lot of volume. It's very busy. And so, the reason I mention that is I come into the space for the client with the solution doesn't have to just be a reverse mortgage. It could be a forward or an equity line, or it's kind of a series of tools in the toolkit to solve the problem. But the biggest thing is unlocking equity in your home. And so
Right.
trapped equity is a problem. If you can't get a hold of the equity that's in the house, it's a high percentage of times that you try to get that, and maybe it's not that easy to qualify or get what you want out of your house. So in this whole space, I'm on here with Karen, who's wonderful, and you, and I mean, we just preach to people to be proactive, to move forward and solve these problems before they become problems. In the reverse space, you have the ability to unlock this equity and use it when you want it going into the future. And so that product runs between what I call a needs base and a wants base. Sometimes it's a financial tool. Sometimes it just makes critical corrections to help people. But when you're talking 150,000 a year, that's a lot of time and money. And if you're talking about cognitive issues, we're talking about durations. I mean, you guys can correct me, but I think in my old coursework, it's 8 to 10 years on cognitive issues, which, you do the math, we're talking $1 million there.
Right.
So that's just that.
Yeah.
In many cases, that's beyond what we can unlock in the home. So one of the things
But it
that's
helps
cool.
though. It
Yeah,
helps though.
right.
They do say that $1 million number, it's what people want to plan for. But people may
Yeah.
have retirement savings or plans besides their home, so the home could add that extra boost because their plans fall short of that million. And you're right, and
Right.
you say unlocking equity and using it, the other kinds of loans as well. Um, I'm a little curious. So, if people come in to the picture and they want to get some equity out of their home, but since they're not working, that makes it challenging for them to get a traditional refi?
Yeah, that would be the issue. And with reverses, the underwriting is much more lenient, and so they want
Okay.
to know that you have good credit, some type of credit. They're more concerned with your ability to pay your taxes and your insurance and that type of thing. But it's a much easier. We go through a thing called financial assessment, but that's a very modified version of the underwriting that goes into the other types of financing. The other thing, I had a meeting with clients last week, and I sat with three of the children, and they're in Ocean Beach, and the parents were in the house down the street, and we were exploring options, and I suggested to them to look also as like at an equity line. But there's big differences, you know. With a reverse mortgage, you don't have to make a payment. With an equity line, you have to make one. You have to qualify. Um, you know, there are a
Mm.
number of different issues, but and we're going to come up probably with the best possible solution. But I'll tell you what, that reverse mortgage, since it was created back during the Reagan administration and its creation, it has not changed. One thing, whether the economic times come or go, they aren't pulling the product. And I've seen banks close equity lines in a matter of weeks. So,
Mm.
so there's really just a bunch of different ways
Yeah.
to
No,
deal with.
explain that a little bit. So when someone has a reverse approval on deck but isn't accessing it yet, then
Yes.
they don't close that line and they don't pull the product, but on home equity
Yeah.
lines, yeah, they'll shut it
Yeah,
down.
the major product is an FHA product, so it's a government insured product. It has a lot of insurance in it, mortgage insurance in it and during it, and so it's just really protected. And politically, I would say, I'm not a politician, but that product is kind of the golden ticket. No one would ever talk, you know, would come in and change or modify this program. It does go through modifications, but once you get whatever the agreement is, the rate, the term, not the term, the rate, and the mechanics of it, those
Yeah.
are really good for the life of the loan. The only issues with the reverse can be occupancy. So if you get into this situation where people have to go into another into a facility, then that can cause a circumstance where you're going to either want to get out of the reverse mortgage. So it really works more for aging in place. And I think you threw out what, 92%? What was the
Yeah.
stat?
That was
92.
Yeah, 92. That was a survey that AARP did, and that was their
Wow.
response. But Karen could speak to that really well because um, there are times when being at home is definitely the best option, and people are most comfortable there, and they have better health outcomes. Then there's other times when they become very isolated, start to be unable to clean or make their food, and it becomes a little dangerous. What are you seeing, Karen, out there in regards to when people are transitioning? What kind of expense, as far as the care facility they're going into, are they taking on? So, are you having more people go into lower care facilities, or skilled care, or memory care? And have you had them change once they've moved?
Yeah, good question. So right now, and during this whole pandemic experience, I see a lot of memory care. As a matter of fact, prior to COVID, my business was about half and half assisted living and memory care. Now I'm seeing about 90% memory care.
Wow.
And I think the reason for that, Erica, is because when the when the virus hit and people were looking, they just put the brakes on. But the fact is that as somebody is evolving in their lives, if they have a diagnosis, then that diagnosis is also evolving, because the diagnosis has nothing to do with a virus, and it doesn't know to stop because the virus is here. And so you see this, so the families have said, no, I'm going to wait. And the level of care that's needed for someone who has a brain disease, dementia, Alzheimer's, Lewy bodies, reaches a new height. And that individual at home, whether it's the husband caring for the wife or wife to the husband, they're also not having anybody come in. So this becomes a real difficult situation and untenable, quite honestly. The other piece of this too is memory care. Folks that have a brain disease, a cognitive issue, it's about caring for them, but it is equally about socializing them and letting them continue to be part of the community. And
Yeah.
so when you are isolating and you don't have that ability to go out to the store and you can't go to the church with your loved one and you can't do the regular things that you've done, isolation has a really, really big effect on all of us, but especially memory care. So I'm seeing a high level of memory care need out there.
Yeah. I think that with the isolation and the lockdown, it exposed a lot of, I don't say weaknesses, but just challenges that may have been existing in the home. And life is busy, it's passing us by, or we have caregiving staff coming in, and the family is not seeing the degree to which the person is needing help or declining. I
Well,
had that.
they also, Erica, from what you just said, they also, the carer is so exhausted from the caregiving that they
Yeah.
can't even see the person's needs anymore. They can't even see their own.
Wow. Yeah. Because it becomes so overwhelming.
Yeah.
So overwhelming. And memory care and dementia is a really hard one. It's more so than physically declining, I feel like, because the person can also be such a risk factor. And they can hurt themselves, the wandering and the different issues that can come up when they're mentally incapacitated, but physically can be on the go. It can cause quite a bit of danger. So absolutely, and that scenario, being in a care setting can definitely be more suitable, beneficial than in a home setting. And that's one of those more expensive scenarios they were just talking about. So when that comes up, David, if they had done a reverse, if one spouse stays in the home, then could they still utilize those funds?
Oh yeah, absolutely. Yeah, it's really, the whole thing's designed to the younger of the two. That's when we generate the information. It protects the last one that wants to stay in the home. And of course, yeah, as it generally goes, one either passes or their needs change, and there is this interplay. So I think about this whole situation and with COVID and all these other issues, and it really has become, it's always been a moving target. One thing I heard from our group, I think from Karen probably, or maybe you, once you've done one case, you've just done one case.
Yeah.
I mean,
I think that was
there's
Karen.
there's absolutely no cookie cutter way to get through this, only a passion to try and help and that type of thing. And I do see the home space changing too. I mean, I've given some talks before as we're going back to kind of our old roots where, when I was a little boy at the pool, my dad lived with his aunt, and she was in a granny flat, and
Yeah.
we're blending families and bringing in people and trying to do some of that caregiving piece, back in the family unit, because of these costs and all these other situations. So the
Yeah.
only one of the cool things about that is, there's some more technology and innovative things to do to use the capital for. So you can unlock equity for a safety net, but you could also create what we're calling a junior JDU, a junior accessory dwelling unit, say taking part of the house and really changing it and making sure that it's right for the showers and all the other things to get ready for it, or even in the case of these other ones, complete detached unit where everything stays on site, so that way at least you can move in the troops if you have to. So
Right. Yeah, and that's a lot of what we try to help people do is utilize equipment and technology to be able to create care spaces in their home. And
Yeah,
there's a ton out there, and there's more coming. I watch videos from other countries of things they're trying and using. In some of the Asian countries, in Japan, they're really pushing the technology level with
Yeah.
robots and stuff in their care facilities and some of their other lifting devices. But the things we have here now, we could, for example, put in something, either there's a powered floor lift, about $2,500 cost, or an installed ceiling lift, about $6,000 cost. But if either one of those devices made it so the spouse or family member could do transfers independently and not have to hire in-home care, then over time it would be a tremendous amount of savings. Or if they could have one care assistant rather than two for
yeah,
two-person transfers.
absolutely.
We had a client last month who we were able to get a turning mattress, a true low air loss alternating, laterally rotating mattress, and they were able to no longer have overnight care because she couldn't wake up. She was, it was too challenging for her to wake up every 2 hours and roll her husband for his massive pressure source he had. And so this mattress was able to replace the caregiver at night. So it saved them 8 hours of caregiving every single day. Right off the bat, it saved them like $7,500 a month, like that.
Wow.
So using equipment to set up our homes to be able to do some of this care, it's definitely, and utilizing the equity if we have that in our homes to help cover some of that. I think the in-home setup is definitely the long-term more cost-effective if the care needs don't get too high. And memory challenges, memory care, and memory diagnoses, I think pose the biggest challenges to that. That can get really, really difficult. And then the facilities do a great job with that. Karen, I'd like to hear your opinion because I think it was through our group and just having conversations with you and everybody about um, some of the benefits of going into the assisted living facilities if they're at a lower level of care. I was always advocating so hard for people to stay in their homes and try to save those costs. But then I was seeing people not not feeding themselves correctly. Sometimes they were capable, but just not enough. So they had like cartons of Ensure and dishes stacked up for days and not getting out, and they're living alone. And that narrative about the socialization and the day-to-day tasks, if we started to add up the gardener and the housekeeper and someone to cook for us, the daily chores if someone else had to do it, then the assisted living started to make more sense to me. So um, can you share a little bit about what the assisted living client looks like and how it can really help the right person and who that right person is?
Yeah, thank you. That's a really good question. So, people often ask me, so when's the right time to move into a community like that and get the assisted living and the care that you need? And if you're asking the questions, now's the right time to start exploring it. So most people will wait for a hospitalization or something to happen that causes them to move in that direction, not by their choice, but by the universe's choice. And
Right,
so that's really not where you want to find yourself. And it's where a lot of people wind up. But
right.
in terms of assisted living and communities, assisted living, I took care of my aunt for 10 years and she was at home. And my only regret, because we gave her everything that we possibly could and then some, but my only regret is that I didn't uh, have look at communities with her. And the reason I didn't do that was because she turned 100 and she and I both thought, well, this is it. I mean, I'm not going to be around much longer, so why do that? And then 101, and then 102, and then 103. So it was just one of these situations where that didn't happen. But as I look over time, and she was a very social person, there's really none of us that aren't social on some level. It's just
Mhm.
part of what we need as human beings. And so,
Absolutely.
and here's a really important point. You never want to move into a community as your diagnosis. You want to move into a community because it's your choice. You all get to learn each other as Erica or Dave or Karen, not, oh, that's the one that has the Alzheimer's diagnosis. And that's what happens when you wait so long and then you move into a community. They're doing all they can to study that disease, that illness with you, to see what the care is. That seeing who you are as a person may come at some point, but it's going to be down the line. So it truly is, when you can, to step into those communities, move into those communities as Karen, as you.
Right? Wow, I never thought of that. And to view the communities to see which ones you like as Karen, as Erica, and have maybe even a selection if you didn't want to go at that time. But if you were to go, where is that? And what does that look like for you? Wow, I
The
never
people
thought of.
that do the best, Erica, are the people who plan.
Yeah, and we're always saying that. That's what David just said, right? If we could share anything with our audience, it's plan, it's think about these things, put some structure in
What
place of
happens,
the what ifs.
I think that part of what happens is that 92% want to age at home, which I'm all for. And when I work with my clients at Senior Care by Design, my first question to them, tell me about your present scenario. Because if your present scenario is serving you, then I'm only going to look for ways to enhance that. We're not going to be making a move into a community. But 92% of the people say, I want to age at home. I think they think that way because they don't want to make the change. And it's easier to say that, and it's easier to be comfortable with your surroundings, and it's easier to do that. But the fact is, if you look on a life timeline, you were born, you went to the hospital, to your home. You were raised in the home, then you went to high school. You started hanging out with other people, you went to college, you got in a dorm. You graduated from college, you went into another house because now you're working on your career. Then you move into another home because it's marriage. So every single time in the course of our lives, transitions happen all the time. This is
Yeah.
no different. This is
Yeah.
absolutely no different. It's time for us to find our next tribe.
Right. Our next tribe. And I used to go when I speak to our demographic, events and stuff. It was always as far as preventing a fall and fall management. It was medication management, and then accessible design and equipment. But now research has moved to its socialization above medication management to maintain health and have fall mitigation, fall reduction, because it's not really, I don't think it's all the way understood science, but us being together makes us stronger, not only emotionally, but also physically, and helps us thrive more. So that's really interesting and really important. And yeah, I think we are going to have to look at these issues and maybe redefine um, our our transitions and our tribes and our where we're going in these different phases of life and what's actually best practice. And of
And
course, it won't be the same for
And
everyone.
that's the silver lining of this virus, is that the curtains are all pulled back. We get to examine it all, and we get to create the life that we want to see, because we see what exists right now, because there's no curtains anymore.
Yeah,
It's,
yeah.
it's, it's actually a blessing. I would rather not have this blessing, quite honestly, but
Yeah, it's a painful blessing. And that's true on so many layers of society right now. This is the one that we're in that we see all the time. But definitely, COVID has put the brakes on and pulled the curtains back on so many different layers of society and personal development and home situations, all of it. I think it is very much the silver lining of COVID. And I hope that we come out stronger and better. And it's through networking and groups and really understanding our resources out there, which is why I want to share, these podcasts and YouTube videos and our industry groups, because if people don't know, they don't know what they don't know. And so we try to share the information and help people make these great decisions for themselves and make them before crisis mode, when they're making their perfect life scenario and how they want it to look like. I had one more question for you, David, because I didn't get to it before. I
Sure.
heard about, so the reverse, when a reverse comes to the end. But if a reverse were to run out of funds, but the person has not passed, they cannot be kicked out of their home. Explain to me a little bit about that if they actually lived past the amount of equity that they had projected in the home.
Well, yeah, the loan is, it's called, the technical terms, it's called a non-recourse loan, which is unique. Um, it means that you or the heirs could never be responsible for anything more than the current appraised value of the home or the property. So if you got to some situation where reverse was taken out, maybe at its inception, which is 60 now or 62 years, and remember the balance is growing because it's growing internally, because instead of going to the mailbox with your payment, you're not, and so it is getting bigger over time. But there's no point in the reverse when that they can ever throw you out of the property or take you away from the property, even if you're what you would call upside down, that the balance had grown higher than the actual value of the property. So there have
Yeah.
been instances where people have died, and the balance is higher than the equity. Generally, in that case, they will just turn the house over to the lender, and there's been cases where then the property is really offered at 95% of the value that they come up with to the family if they want to buy it back in a short sale. So I spend a lot of time trying to demystify reverse mortgages. I think they have this weird aura around them, spooky and all that. Well, loans can be spooky. They are loans, and they're all the same. They have demands and they have terms. And so, but really with the reverse, it's about the same. But I think in a strange way that while you're living, the reverse mortgage is about the safest way to stay in your home, right? So if you do get to
Yeah.
that point, you would lose the ability maybe to draw from your line of credit, right? It would say, okay, you're maxed out. But big deal. I mean, the thing was, well, you will have used that, and you don't have a mortgage payment to stay in your property. So that's the bonus. And when you look at these big numbers, got to remember that some income's coming from somewhere, be it Social Security, maybe aid and assistance for a vet, that type of thing. If we
Yeah.
can get like halfway there, or that type of thing, you can't. It's obviously hard to pin this just on unlocking equity to solve the problem, but that's definitely an untapped resource that you want to have the option to use if you need it.
Yeah,
Right.
it's a piece of the puzzle. It's a piece of the
Yeah,
puzzle. And in California, it's a big piece because,
yeah,
man, houses are expensive out here. So
yeah.
they've appreciated a lot for a lot of people.
Yes, we have, and yeah. So those numbers are bigger, right? And so if
Yeah.
people are, and we do have a lot of people sitting in homes with a lot of equity right now, thanks to forward appreciation and good cycles in the real estate and all that. So they're there. They also have a product we call jumbo reverses, and they're not a governmental, but they're more of a private portfolio type of investor product, but that works on really large properties. So I live in Solana or Carlsbad, but back in Rancho Santa Fe and some of these areas where if houses get above 1, 2, 3 million,
Yeah.
these products can work to unlock really large amounts of money. So not to get technical, but with the conforming reverse mortgage, the top maximum claim amount, which is the top value that we calculate these principal limits, is around $750,000. So you don't get the benefit if you're living in a house that's $1.5 million that you might want because of that
Mm.
in that product. So, and hey, welcome to California, where a tract home can be a couple $1 million. So
Yeah.
you
Yeah. So
know,
the jumbo makes sense.
yeah, it can.
Yeah. Well, this has been great. So it's definitely a piece of the pie. There's other financial tools in the toolbox and income coming in for most people, hopefully. But I will
You know,
absolutely put,
oh,
oh,
I
go
was going
ahead.
to toss one thing in. My dad, God rest his soul, right? He's passed on, but his thing was always, "Hey, it's not what you make; it's what you spend." So,
Yeah.
so You know, we've got to be frugal. We've got to be resourceful. There's a generation passing right now who were in the Great Wars and other things. Not so great, the wars, but they were all, what is it, a penny smart and a dollar wise or whatever. They were
Yeah.
resourceful. And I
Yeah.
look at these people from a financial side and I go, my gosh, how did they make this all happen? One day at
Yeah.
a time, right? They went, you know, they just pencil it out, and they lived within their means. So
Yeah.
Dave, I
One
wanted
day at a
to,
time.
I wanted
yeah,
to, Karen, I wanted to just say to you in terms of the reverse mortgages, when I talk with clients, because that's something that I also serve up if I see the opportunity.
yeah,
And 9 times out of 10, well, I've heard not good things about that. And I said, the
yeah.
reason you haven't heard not good things about it because you haven't been working with the right person. If you work with the right person who's honest and has a track record and all of that, and I said, I have the perfect person, and of course it's you, but you know, it's about. I think when humans, other than those who are in the industry, step into this circle, step into this space in their lives, they're in the desert. They don't have the skill set. They don't have the tools. They don't know which way to turn. And, you know, that's why all of us are certified senior advisors, because we know where to get them fast. And
Yeah.
reverse mortgages is a valuable tool for retirement. Valuable.
Yeah,
Yeah.
absolutely. I do want to see more people be open to the reverse mortgage because it was the quote sharky loan, you know, when they
Yes.
first came out. And I think they've reformed them and how they work a bit. And from everything that I've learned from you and from reading up on them, they can really benefit the client and be the safest way to stay in their home if that is the plan, because they cannot be removed out of that property.
Yeah, and you know, it's another funny when you're driving down the freeway, you see that sticker on the RV that says we're spending our kids' inheritance. Well, sometimes you got to spend a little of it to, you know, to stay alive, right?
Yes.
So there's no, you know, and that's part of the dynamic. But whenever I do these reverses, honestly, it takes 4 or 5 meetings with people and educational. It's not a hard sale thing. I have no clue. I love Tom Selleck. And I love AAG's commercials on the reverse. They're probably the biggest provider in the country who I represent on a wholesale level. But I don't know how you do this through a call center. You know, you really have to sit and look at people and kind of, you know, and it's for all, it goes for all of us, right? All 3 of us. You know, there's a lot of physical touches. There's touches
Yeah.
involved in the process. It's not like one button makes it happen. It just doesn't do that.
Well
No,
Right.
said.
no, that's for sure. And the conversations are longer and decisions are sometimes are as well. That's what we do.
But you know, in that moment, Dave, that you just talked about, and taking that time, that's when we as professionals and humans, we listen, and you can, if the level of I'm not on the ceiling anymore, and that feeling comes down. No, I'm talking with someone who knows what they're saying and doing. It's like worth everything I have to do for my
I
Yeah.
client.
agree.
I can
I
hear it.
agree.
I can hear it. I'm like, ah, now they're down. Okay, now they're, you
Y-
know,
Yeah, those moments are tangible.
yeah,
Like you feel it in your
yeah,
body.
yeah, exactly.
It's our greatest calling,
Yeah.
Yeah,
and it
Yeah.
feels good.
it's my serotonin uptake.
Yeah, it's so needed. It's so needed. And so I'm going to make sure that I share in the show notes for this podcast will be Karen and Dave's emails and websites. So you guys can reach out for more information or learn more if this is something that can apply to you or your loved one, or someone you know. Like we're saying, sharing information, sharing is caring, getting it out there. So thank you guys for being here with me today. We'll
Thank
put
you.
all of that pertinent
You're welcome.
information below. And it was really a joy to chat with you for this time.
Always,
Yeah,
always.
equally. Yeah, thank
Hey,
you.
you are welcome. Have a great one, guys.
Take
Bye-bye.
Okay.
care.
All right. Bye.